Hello my friends, and welcome to the Electric Viking. Fantastic to have you here. If you haven't already subscribed, make sure you do so that you get notifications in your feed for our future videos. Now, BYD has been absolutely crushing it in China as of late, and I believe they're about to in some other countries very soon. But their plug-in EV sales are up 207% versus the same period last year, and they're making a profit. Now, this doesn't sound like much to some, but I can tell you it is, because there is now over 600 EV manufacturers in China. Incredible. Just imagine the kind of competition going on between these companies to get sales. Now, the top selling EV in China this year has been the Hongwan Mini EV, which actually costs only $4,000. Companies that make that vehicle, GM, Wuling, and SAIC, make $20 per vehicle sale. But remember, they get EV credits from that sale that come to a total of $1,000, meaning they actually make around about 20% profit on every one they sell, which is a pretty good profit margin. So these kinds of EV incentives apply to all manufacturers, and different Chinese cities all over the country are kind of competing against each other to come up with the biggest, best, newest car companies. So the race is on in China. And leading that race right now is BYD. Now, Chinese electric vehicle manufacturers have won the attention of global stock investors in the past 3 years, in part through hugely successful US IPOs by upstarts NIO, XPeng, and Li Auto. The stocks have all doubled in value since their listings, thanks to growth in China's auto market, the world's largest. Their run has minted new billionaires, enriched venture capitalists and retail traders, and highlighted the shifting balance of power and technology in the global auto industry. But you know what? Ironically, outselling every one of these new public outfits is BYD. In fact, outselling all of them put together. Now, BYD, China's biggest supplier of electric vehicles, shares have soared of late, and they're up 174% over the past 12 months. In fact, most of that has come over the last 3 months since I recommended buying the share. In fact, since I pleaded with people to buy the share. But, of course, I'm not a licensed stockbroker, so this is only my opinion. Now, unlike those newcomers, Li Auto, XPeng, and NIO, the Warren Buffett-backed company has deeper industry roots and actually makes money. Yep, they make a profit. Its net profit doubled to $660 million last year from 2019, on sales that rose by more than a fifth to $25 billion. BYD's market cap of $91 billion tops GM's at $80 billion and Ford's at $54 billion. Its financial and stock performance has also helped propel its billionaire CEO, Wang Chuanfu, to number 3 on the 2021 Forbes China Best CEOs list unveiled last week. Now, China, the world's number 2 economy, soon to be the first, the biggest economy in the world, will be central to electric vehicles' future. It boasts the world's biggest auto market by far, and it accounted for nearly a third of all motor vehicles produced worldwide last year, up from just 13% in 2008, according to Statista. But remember, many of the cars you buy that are not technically manufactured in China have many parts coming from China as well. They may be even more than 50% Chinese manufactured without you being aware of that, compared with a 15% drop in overall sales amid the pandemic, according to the International Energy Agency. This year, auto purchases will fall to 69.8 million, down from their 2017 peak of 80 million, Statista says. But EVs are making up an even bigger percentage this year, much bigger than they were last year. Now, the way BYD's Wang sees it, EVs will soon dominate in China. The EV penetration rate of new sales during the first 6 months of the year rose from 6.4% in January to 15% in June. 15% of all cars sold in China in June were EVs. Wang noted in written replies to interview questions from Forbes China, new phenomena never develop at similar rates, and the industry is changing at a pace even faster than imagined. He added that he expected new EV sales to account for 70% at least of the Chinese market by 2030. Now, personally, I think he's wrong. Dead wrong. I think EV sales will account for 100% of the Chinese market in 2030, but I'm sure he'd be happy to hear that too. Fast growth and huge global stakes are attracting not just new entrants, but also potential partners to the auto field, including telecom maker Huawei, internet heavyweight Baidu, smartphone maker Xiaomi, TV maker Skyworth, and real estate developer Evergrande. And that's just in China alone, where many internet companies see the auto becoming a smart device similar to a smartphone. Many of these new auto companies won't survive, but some will, says Bill Russo, founder of Automobility, a Shanghai-based auto consultant who has worked in China for 17 years. We're at the beginning of the next wave of the competitive landscape, and the ones that do survive may just be the next Apple of the world. Now remember, there's actually more than 600 EV startups in China. More than 600. How many do you think there are in Europe, in the United States? Well, what about in the rest of the world combined? You know, there's more EV startups in China alone than the rest of the world combined. Have a think about that. Wang, an orphan born into one of China's poorest provinces, made it into college, graduate school, where he studied battery technology. And guys, if you haven't seen my video about his personal history, I suggest you check it out. I'll put a link in the description below. He has an incredible life story. The fact that he has come to where he is at now is just truly staggering. After a stint as vice supervisor of the Beijing Non-Ferrous Research Institute, he was influenced by the wave of entrepreneurism sweeping China in the reform-minded 1990s. Now let's keep in mind, he was actually brought up by his brother and sister. He was an orphan, brought up by his brother and sister. Incredible. Now his institute set up a company in private sector Mecca, Shenzhen, and that eventually led to Wang founding BYD there with his cousin Liv as a rechargeable nickel battery business in 1995. A successful spin-off company, BYD Electronics still sells batteries to Samsung and others. Its sales in the first quarter of this year topped $3 billion. BYD entered the auto business in 2003 with betting that his batteries would work there. He started selling a plug-in hybrid passenger EV models back in 2008, 13 years ago. Now it was all the way back in 2008 when BYD received a stamp of approval for Warren Buffett's Berkshire Hathaway, which bought a 9.9% stake in BYD for Hong Kong $8 per share. Buffett called partner Charlie Munger Berkshire's team leader on BYD in 2009. Munger called Wang and BYD's success until then a near miracle, lauding its technology progress and ambition. I know it looks like Warren and I have gone crazy, Munger said of the BYD stake, but I don't think I have. Now, interestingly, it was actually Li Lu that introduced Charlie Munger to BYD. Li Lu is the founder and CEO of Himalaya Capital Management Holdings in the United States. I've got a video as well about Li Lu, which I'll put in the description below. He had an absolutely incredible life story as well. In fact, he was at Tiananmen Square when the shootings happened, when the mass shootings happened, and probably thousands of people were killed by the Chinese government. Then he moved to the United States and began his company after attending university there and being mentored by Charlie Munger. Well, he called Munger in 2008 and he said, "You must invest in BYD." And Munger trusted him. In fact, Munger has even said he will be the next CEO of Berkshire Hathaway. And of course, this is what led to Berkshire's investment in BYD. So Berkshire Hathaway bought shares in BYD for $8 per share, 8 Hong Kong dollars per share. Now, BYD stock on Friday closed at 212 Hong Kong dollars per share, giving Berkshire a 26-fold return from the Chinese company. Now, new models this year helped BYD sell approximately 41,000 EVs in June alone, almost triple a year ago and a monthly record. I still think there's a long way for BYD to go. In fact, I still think they're undervalued significantly. Now, for the first 6 months of the year, BYD sold 155,000 new electric vehicles, an increase of 154% from a year earlier. Wang's BYD boasts an EV line that now includes buses, taxis, coaches, private cars, logistics, construction, and sanitation vehicles. To date, BYD delivers models in more than 50 countries and regions, including the United States, where it assembles buses in California. In China, its partners include Toyota, with which it has a research and development JV. Overseas sales, amid the pandemic, accounted for 39% of BYD's business last year. For its success to date, BYD has generated at least 3 billionaires. Wang, Vice Chairman, Liv Yanliang, $12 billion, and Xie Zhaoquan, $3.9 billion. Now, buttressing BYD's competitiveness is what 55-year-old Wang calls a full industrial chain and full market strategy for EV's core technologies. For EV manufacturing, that includes batteries, electric motors, electronic control systems, and automotive semiconductors. Remember, BYD is a fully vertically integrated company, even more vertically integrated than Tesla. Guys, I'm more invested in Tesla than I am in BYD in terms of monetary value. So, this is not about my bias for one company or the other. I'm just stating facts as they are. Now, spin-off BYD Semiconductors aims to list in China in Shenzhen this year. Yet among that group, batteries are the key for Wang. BYD's long-term expertise puts it in a position to sell to other car makers, not just put them into its own models. However, with huge demand for BYD EVs and new markets opening up for BYD overseas, I believe the window is closing for other manufacturers to acquire batteries from the world's fourth largest battery manufacturer, which is, of course, BYD. Now, ironically, Tesla's start of mass production at a new China factory in Shanghai in 2019 has benefited BYD by raising awareness of individual retail consumers to the appeal of EV ownership. EV ownership is the hot thing right now in China. Tesla is educating the customer. Nick Lai, head of Asia Auto Research at JP Morgan, told an American Chamber of Commerce in Shanghai on his podcast this month. Wang is now courting those customers with new sedan models, moving to expand beyond his own EV long-term strength in fleet sales. Of late, he has been launching sedans named after Chinese dynasties, such as Tang and Han, and they've sold very well. It's been a winning approach. You start as a battery company, Russo said. You anticipate EVs. You pivot to making vehicles. You stay true to your roots. You start with the fleet market because that's what the market presents to you. You wait for the global leader Tesla to come in and open the retail segment, and you quickly follow up with retail-oriented products, and then you separate them into purpose-built fleet designs, and your end game is to eventually capture value from the battery business supply chain, which is right there from the very beginning. You stay true to your core, and you extend your business as opportunities present themselves. It's very smart. While expanding its lineup at home, BYD is looking to expand passenger EV sales overseas. It announced in May that 1,500 Tang EVs would be shipped to Norway within this year, and in February 2021, it signed an agreement with Australian customer Nextport to ship passenger EVs there, and there has been enormous demand in Australia for them, with thousands and thousands of pre-orders already taken. It continues to chip away at the global market for electric buses. It delivered 43 electric buses to Finland last month. For instance, in the US, BYD's California Electric bus plant employs almost 1,000 people. Wang's lead at the top of the China EV pack demonstrates the willingness of Chinese companies to pivot to where the opportunities are, says Rosso. What the Chinese companies seem to realize that the foreign companies do not is that the future of mobility isn't an extrapolation of the past. Rather, EV successes will involve nimble entrepreneurs who are able to adapt quickly and target younger Chinese customers that are among the world's most willing to try new products. Foreign automakers are completely blinded by this, he said. Wang's overall costs are likely to be lower than his rivals due to his in-house component strengths, Rosso said. And also, right now, 90% of the product is made in China. Yet he'll need that advantage because of price pressure from the growing number of new EV models produced by the myriad of local rivals. One early investor just reduced its BYD holding this month. Himalaya Capital Management, whose founder, Li Lu, introduced Munger to BYD, trimmed its stake to 6% from a previous 6.35%. So not a big change, but still a change. Wang nonetheless has another advantage that his current round of upstart Chinese rivals don't, and that is experience. The market is like a battlefield and competition is a war, Wang said of business leadership in the cutthroat EV market. Generals play a crucial role. This requires entrepreneurs to play a leading role. Other requirements for success Wang suggested are dare to pioneer innovation and persevere and never capitulate. Such dependability is a vital part of entrepreneurship, he said. He went on and said, last but not least, entrepreneurs should stay focused on what they are doing in their leading roles. They must do more and talk less. Given a leader with those skills, Wang added, a successful company must fully grasp key technologies, implement accurate strategies, and possess a mechanism for speedy decision making. The wrong strategy may be the worst mistake of all, however. If the strategic direction is wrong, 5 years may be wasted and nobody can buy time. Wang said, don't expect long-term thinker Wang to fail to have a direction that he wants to go. Now keep in mind, BYD is the only company on the planet right now that can sell its EVs at the same price as petrol and diesel vehicles and make a profit. Its costs on its battery technology have come down to below $100 per kilowatt hour, sitting right now at $96 per kilowatt hour. It is the only company in the world right now that has reached that point. That's why in China, BYD is selling their EVs at such a rapid rate. Thanks for watching. Look forward to seeing you on the next one. Bye-bye.